behind the proverbial...
No, not that one.
Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
All right. Let's see. Oh, that's the wrong button. Okay. Let's get this down to a manageable level. All right. Hello. Okay, so we'll do basic Q&A type stuff. If you guys have any questions, let's go ahead and knock those out. And then we can delve into the world of tokenization and chat about that and how maybe that's the next kind of ETF moment. So who knows? A lot of money is parked in those ETFs. So maybe kind of wide-scale tokenization of assets is part of that. Hello. And if it is, there's a lot of scratch on the table. Yeah. So let's see. We can actually throw some prices up in the background. Just keep a look at the market. Not much has happened since yesterday. Everything's been pretty flat. Everything got dick punched Sunday afternoon by a couple of people selling and destroying the whole market. And that's the way it is because we still have illiquid markets. And yeah, so everybody got, hammered. And this is what we get. And so, yeah, what a difference one day can make. We were at 45 and change Sunday. And now we're at 41. I was flirting with 4,200 earlier. On Ethereum, Bitcoin was at 113 earlier. It just kind of came down a little bit. Let's see not the 30-day. Yeah, so it was up in the 113s. It's been up 113 a couple of times. It was only really yesterday, twice, where it really got kind of dick punched. Otherwise, it was just mostly the damage from Sunday. But it's gotten most of that back. That was down to a 111.7, and we're already back to 112. Let's call it 113. All right, so it's slowly chewing back some of its losses, but everything's pretty quiet. Hyperliquid's getting beat up a little bit still, which is weird because the platforms, CZ's pumping, Aster, and all this kind of stuff, which is fine, but that was already a platform that wasn't making any money. It's been around for years. This isn't a new thing. It's just, I feel like he had some beef with Hyperliquid. He either tried to invest in them and they said no, something happened, and he's pissed. So he's out there, trying to hoover up liquidity to this other platform. But at the end of the day, after the little reward period for that specific token, I don't think it's that big of a deal. I think there's going to be more than enough money going around and more than enough gambling and foolishness to suit everyone. There's plenty of space. XRP is green. Not on my thing. And that's because of another one of those kind of fake partnerships. The XRP stablecoin, which, by the way, you guys understand that the XRP stablecoin, what is it? XRPL USD, whatever the stupid thing is, has nothing to do with XRP, the token. You guys get that, right? I feel like a lot of the XRP community doesn't really understand what's going on behind the scenes. Their stablecoin makes no use of XRP, the currency. The XRP ledger makes no use of XRP, the currency. You want to probably factor that into your math. None, zero. So any kind of pump you get out of these kind of little announcements and stuff that they make, it does not translate to the token, other than just dummies maybe buying it up with enthusiasm. I don't know why people, I guess, you hang on tightly to something like that because they're so committed and kind of cultish in the XRP community. Yeah, it's just emotion. It's just all cult emotion, because that coin should probably be 30 or 40 cents. And that's being really generous. Back when it was down to 20 to 30 cent range, that was about right. That's about where it's supposed to be. This is just it's a project, XRP. It's just kind of, it's a team of jackasses with no use case. And the only use cases they find, the companies that they work with don't even want to use their token. When they buy into a company and force them as part of their buy-in to use XRP, the companies don't like it. They're like, I don't think so. They're like, you don't want our money? They're like, no, not really. We'll take your US dollars. We just don't want your XRP. We're just going to have to go sell it. So it's just, yeah. It's unfortunately the XRP community, mostly, with the exception of a very small few. It's a bunch of kind of uneducated, financially, I don't know, see, it's not unsophisticated, it's financially uneducated, kind of hillbillies, and which they're good intentions, they good old working class, salt of the earth Americans, but Ripple, the company, has had almost a decade to make a dent. All right, a decade. You can't do one flipping thing in a decade. You can't get one solid deal, not one real deal, one real actual piece of continual commerce in 10 flipping years. You are a failed company. Without XRP, the currency that they get for free, 1 billion tokens unlocked a month, without that company is completely bankrupt. They're beyond bankrupt. And all these uneducated, like toothless hillbillies that give them money for this token, you guys are idiots. I know I'm not talking to any of them here because none of them are here in this group, but it's sad, man. And then I do too. It's like I check out. Whenever anybody starts talking, oh yeah, I got XRP, I'm like, oh no, you're an idiot. Right? Like, because you know that people that have XRP don't know anything. Like less than nothing. You feel bad for them. You want to give them a hug or something, but you don't want to catch whatever they've got. You don't want to get too close. You want to give them a hug through one of those safety glass windows, like where they put people that have Ebola. Like if they're on the other side of that glass, you give them like a glass hug, like, yeah, but you're not going in there into the Ebola room, the XR Pola room. Anyway, yeah, there's other projects like that too. That's not the only dummy project. There's a lot of them. I mean, if we're honest, Cardano's starting to become the same thing. Well, it's becoming the same thing. So yeah. So the same people that are holding out for XRP 589 are holding out for $3.20 Cardano. Okay. Good luck with all that. Yeah. So that's about that. So the only project really getting beat up today is Hype. That sucks, man. I got into that thing. I'm almost back down to my break even, man. When did I get into that thing? 43.90. Let's call it $44. I've only got $3 of profit. I didn't buy that much either. But still, damn it. If it gets back down to $44, I'm selling it. I'm gonna break even, probably, and just throw it back in Ethereum, where it should have been the whole time. Anybody else? Is there any other standouts? Nah, everything's kind of flat. One up, one down, one. Oh, DeBridge. Well, DeBridge is kind of a worthless, junky kind of asset, and you can't count Gamer Token because that'll move up or down. If somebody spends $40 buying GMRT, that will move the price by 10%. So can't really count that. DeBridge, DeBridge is the coolest project where there's a disconnect. It's kind of like Jupiter, where there's a disconnect with the token, where the product is great and the token is trash. Yeah. And I don't know if there's any way around that. These guys are just, I don't know, maybe there's an inverse correlation between how well you build products and how well you manage your currency supply. Like the creativity part of the brain is, what is it? Anathema? It's in direct opposition to the profit, make money, finance side of the brain. Like those two are always in conflict. So that if you're really creative, you can't do crap with money, and if you're good with money, you're not very creative. I think there's an inverse proportionate relationship. Anyway, seems to be the case for DeBridge. Seems to be the case for Jupiter, which, yeah, Jupiter's days are numbered in my portfolio. But I'm going to keep getting all my free rewards until they run out of free rewards. Yeah, so that's it. That's kind of the state of the markets. Let me see. Make sure I haven't missed anything. Okay. Quick poll. If you had 3 assets to own, you have to own 3, and you have to own them a third each, 33.3% each in your portfolio. Okay, so you have 3 choices, only 3. I can guess what your first 2 are, but I'm curious what your third one is. But anyway, tell me what your 3 assets in your 3 asset portfolio would be. What would be your 3? BTC, let's see, BTC, USDC, BTC. No, it can't be the same one twice. Let's see, BTC, ETH, Hype. Oh, HYPC. Interesting. Not Craig. Interesting. Not wise, but interesting. Let's see. BTC, JLP, ETH. Okay, Heavy. Let me tell you why that's your. I don't think that makes sense. For those of you that are holding Bitcoin and Ethereum and JLP, that part, if the rewards aren't the little rewards that it grinds, I don't think that's enough to hold it in addition to Bitcoin and Ethereum. You're already holding Bitcoin and Ethereum. JLP is basically just a little index fund of Bitcoin, Ethereum, Solana, and 2 stable coins. So I don't know why. I mean, if it was either JLP or stable coins, then you would probably hold JLP because it's basically like holding stable coins. The problem is you have Solana. You have Solana in there. And if Solana goes backwards and doesn't achieve what people think it's going to achieve, I don't know. I mean, I'm just trying to shake things up. You do whatever makes you feel right. Yeah, and now you can earn a little yield on USDC, so it makes sense. I don't know that I would hold Bitcoin, Ethereum, and JLP, which is Bitcoin, Ethereum, Solana, and 2 stable coins. I might just hold stablecoin and have it parked somewhere where it's earning, 4 to 8% or whatever is that. Ondo, that's your third asset, Ondo, maybe? Okay. I can see that. I don't think Ondo's bad. I think Ondo has these moments where it runs up. I just wonder if it's capped. I just wonder if there's a top on there, like a psychological top. No, that's not an asset. Selling a put is not an asset. Hypercycle, HYPC, the token. Okay. Again, I don't know that. I think even in the last 2 years, I don't think I've ever told anyone to just sit on the token. So the good news is you guys are not getting your marching orders from me. My name's Bennett, and I ain't in it. Node factories. Yes, but that's not a token. That's not a token. You guys listen to the rules. If you want to win in life, you must listen to the rules. 3 tokens. 33% each. 33.3% each. Tokens. Okay? 3 tokens. Node factories, not tokens. The fact that those tokens are in there tells you that they're really not tokens. Anyway, but if you were going to hold for an investment portfolio, Ken, you're not going to go buy hypercycle tokens and just park them in a wallet. But I see what you're saying. You could have a significant portion of them because they're in the node factories. Therefore, that could look like your third. Well, yes, that might be the actual third for many people. Matter of fact, for me, it might even be because I have when it's all said and done, at the end of November, I'll have 62 or 65 node factories. Something like that. A lot. So you think, okay, master nodes. So each one of those is times 512. So anyway, that's a lot of tokens. God, how many tokens is that? That's scary. Let's see. Holy crap. That is a lot of tokens. So yeah, if we did it like that, then I too would have a lot of hypercycle tokens. Does JLP go up based on revenues, interest from the lending platform? Yes, but that part is minimal. It's mostly, and so you can kind of you want to get the idea of it. Just look at JLP, then take a look at Bitcoin, Ethereum, and Solana, and then back those out, right? So JLP is up 72 point. Let's call it 73% on the year. Okay, 73%. It's amazing. But then you go to Bitcoin, it's up 78%. Ethereum's up 57, but that's just after this recent dick punch. So you go 78, okay. 57, okay. If we go to Solana, I don't want to even look up Solana, but we can look it up just for fun. $219, it's up on the year. Where's the 1 year? It's kind of all over the place, isn't it? I mean, technically, if you go back a year, it was 144. It's up quite a bit. It was about 70%, 70-ish. Anyway, yeah. So you have to back those out. So then you go back to Jupiter JLP, it's at 72, and so those are up high 70s, close to 80. So it is up. It hasn't quite tracked Bitcoin. It hasn't quite tracked the tokens in its assets. So it's actually going a little slower than if you just held Bitcoin and Ethereum and Solana. So right. So why? Because it's being it's being held back by the 2 stable coins that it holds, which keeps it consistent, but it's gonna probably make it trail by about 20%. Now, there are some rewards earned from the platform, yes, the grinding, but that appears to be pretty minimal, because otherwise it would be outperforming, and it's not. So the grind that it makes in and around the Jupiter ecosystem is not equal to the loss that's created or the lack of gain that's created by the 2 stable coins that it holds, because math. So I'm just going to hold Bitcoin and Ethereum. Yeah. Yeah, I'm ready to exit a lot of stuff too. But the problem is you keep waiting. The Bitcoin is still in a bull run. So is Ethereum. So are some of these. I mean, we just had like less than a month ago, we had all-time highs on both of those projects. And the world is a better place for crypto. I don't know about everything, but the world is a better place for crypto now than it was last month, for a lot of reasons, for crypto. So you're going to get these weird, I don't know what regulators are going to do about that, about weekend weirdness. They went after the Hunt brothers, and there's nothing the Hunt brothers that were doing that was specifically illegal until they made it illegal over a weekend and then went in and started indicting people. If you saw enough of that kind of weirdness on the weekends of people pulling shenanigans, my bet is gold is sound money. I don't think gold is sound money. That's a different argument. That's an advertising thing for gold. Gold is not sound money. Gold performs in and only in situations where there is extreme levels of near-term uncertainty. Gold has performed pitifully over the last decade. It's just the last year that gold has started performing again. Remember, you go back to the last time gold was at all-time highs, 2010, that 2010-11 run. It basically touched 2000. So it hasn't even gotten a double, has not, in 15 and a half years. Think about that for a second. In 15 and a half years, gold has not gotten a double. Do you think in 15 and a half years that the money supply has doubled? Yes or no? Easy question. Do you think the supply of money on Earth has doubled in the last 15 years and 6 months? I bet there's 7 times the money or 10 times the money. So that'd be interesting. The problem is, how do you measure that? You can't really measure M2. It's all these derivatives and crap. But gold has performed very poorly. Very poorly. It's near term performing well. Why? Because people are uncertain and panicky, and it's become the cool trade. And that's great. I'm glad. I don't have much gold left. I have some silver. I have a lot of silver. But gold has performed horribly until just recently. So don't let recency bias affect you. If you had $1,000 in gold in 2010, you don't quite have $2,000 yet. You realize that, right? Since 2010, you don't have 2,000. Do not. If you had $1,000 in Bitcoin, you have $100 million, $113 million. $1,000, $113 million. $1,000, $1,800. But yeah, no. Let's definitely keep singing the praises of gold. It's really done great over the last decade and a half. So you guys we all have to be careful, myself included. We all have to be careful that you don't get recency bias and let it affect your trades, let it affect your mood. One of the things let me talk a second about the psychology inside the options. Some people they'll so right when you sell your options for the next week, let's say those of you that are doing this, we'll keep this quick. Those of you that are selling options, you sell your contracts, especially if they're puts, and the price goes down a little bit or whatever, and you see this big negative. Oh, I'm down this much. In the accounts, that's the way it shows it, which is really misleading. You're not down anything because you can allow yourself to get put and erase that hold down. Like on my accounts, it's normal on a Monday or a Tuesday to see it negative 190,000, 260,000. I was down one day. I think I opened yesterday down 460K. But it's not real. It's not real because why? You don't take that loss unless you buy those contracts back right then. You let time decay, and at the end of your time decay, you decide roll it or just get assigned. And they're both viable options. But when I look at these assets and I say, well, if I get assigned and I get stuck the asset, am I okay owning ETH A? Yes. Yes, especially since staking is coming too. Staking is coming to dinner. So I'm okay owning the underlying asset. I'll just sell calls against it. So you're not going to eat that loss. So you get a get out of jail free card. Does that make sense? You get a get out of jail free card. That's why I like it so much. So anyway, just keep that in mind. Don't let, when you're looking at your account, make sure that you're doing the correct mental math and that negative whatever the value of your puts from the market price means nothing. Because if you ever think the price of Ethereum is going to recover, or you ever think the price of ETH A or IBIT are going to recover to where they were when you sold those contracts, which was probably days ago. If you ever think the market will get back to what it was days ago, you just, those numbers, the negative numbers don't matter. They do not apply, sir. They do not apply. Is staking coming to ETH? Well, I don't know. I know that almost every ETF will probably have some level of staking benefit if it's an Ethereum ETF cooked into it once that we're thinking that that's October, by the way, that's going to go through. Like kind, redemptions, and staking all in one fell swoop. Yeah. Okay. With the crypto-friendly environment that's been created through legislation, do you think it will or could create a kind of next generation of tokens built by teams with good business case? Yes, I do think better business people will enter. Well, that's part of the tokenization thing. So, and we're going to talk about tokenization here in a minute, but kind of the idea is that if you look at the world differently, if you look at the world, instead of saying ownership of a thing, I think it should be like leasership or rentership or usership of a thing. We don't fully own anything because there's service, there's debt service, there's opportunity cost, there's all this stuff. There's always a cost. So we don't really ever own anything, but we may hold at a certain moment in time some purveyorship over it, some what are some of the other cool words they would use back? Proprietorship. I'm the proprietor. So you may own some, you may have some level of control over some assets. So the idea that you could tokenize every GD thing that you've got and that could be used in value swaps for other things approaches this idea. I think that's the way to do it. Well, I think that's what's going to happen. Whether that's the way to do it or not, I don't know. But I think that's what's coming. I think the tokenization of most, not everything, but most everything is going to occur. And I think with that, kind of along the lines of what you're saying is, I think competent business people and, more solid individuals, less scummy, corrupt the less Brad Garlinghouse, less Chris Larson, less David Schwartz, less Charles Hoskinson, less CZ, less Bankman Fried and Alex Mashinsky and Do Kwon and all these other scumbags, Kyle Davies, Zhu Shu, all these Mike Novogratz, all these effing scumbags, Raoul Pals, all these pieces of garbage. These guys will be sidelined mostly with their little communities of douchebag, yes men, follower, fucking lemmings, and competent business people with hopefully better sense of ethical, compass, moral and ethical compass will show up. So I am in your camp there. And I think that's what's coming. And I think that's what's coming with the tokenization of most stuff. This idea of the tokenization of most stuff. I think that's what's coming. Yeah, as a service. Yeah. I mean, I think that that's coming, which is a good way. Well, yes, but remember with I think what Donna was referring to is the idea that you could have your ETFs that have staking, because if the ETFs have staking, then you get a little bit of a reward for that's going to put some premium in the ETF market. That's also going to probably put a pretty good little burst. I mean, I think that's probably a 20% bump on the price of Ethereum, just that. Within 1 month, I'm going to say it. I'm going to make a ridiculous proclamation that I don't think is too ridiculous. I think that within 1 month, 30 days, I'll even take a non-big big month day. 30 days of the Ethereum ETFs being allowed when both staking and like-kind redemptions, meaning you can go from Ethereum into the ETF back out, spit out to Ethereum. When that can occur, those two things, and we think that's sometime in October, so probably in the next month from now, because we're 23rd? I'd say in the next month. From 1 month from when that happens, you're going to see a 20% bump on Ethereum. So that puts us right back at all-time highs from where we are right now. So you heard it here first. So let's say that probably gives me 7 weeks? That gives me 7 weeks. I called it. I proclaim it. I decree it. By royal decree. I decree. I decredit. So there we go. All right. Let's shift gears. Well, actually, let's continue along that gear. And let's talk about, let me see. Gold can protect wealth in uncertain times. Where is the dollar headed? No, I'm not saying that you should hold the dollar to protect wealth, Barry. If your choice is gold or dollar, I would choose gold. Not even a question. This is basically, it's a statement. It's almost rhetorical. If it's gold or dollars, gold. If it's gold or Bitcoin, Bitcoin. Gold or Ethereum, Ethereum. Gold or XRP, gold. Gold or Cardano, gold. Because guess what else hasn't done shit in 10 years? XRP. XRP hasn't either. As a matter of fact, I would venture to say XRP has underperformed. Well, no, because if you went back 15 years, that's back when XRP was a few pennies. So, dang, XRP even dick punched gold. That's wrong. That's wrong. But over the last 10 years, gold has outperformed XRP. So I'm in the gold camp. See, I'm in the gold camp sometimes. But yeah, just, gold has some problems. There's also some problems with gold that are not talked about a lot, and that is one of the this weird fractured synthetic environment that gold exists in, where you have ETFs where there's 500 ounces of ETF synthetic gold, derivative gold, for every actual ounce of gold. So there's a weird disconnect, and there's more people trading the paper than trading the physical, which is kind of weird. The other thing is gold is not rare. Gold is not rare at all. At the level of the surface, it's somewhat rare when, you can just, most places in Africa, for whatever reason, apparently you can just drag your hands through the mud and there's gold if it's near the river. There's a lot of placer gold in Africa. It's really weird. Gold is not rare at all. And in space, it is less rare. It is incredibly prevalent. So there is a ticking talk. There's the guys in San Francisco that were converting mercury. They were, by some process, they were converting mercury to gold. They're testing now and doing all sorts of stuff. But this should bother you. If you own gold, the fact that some dudes, some hippies in a lab in San Francisco can make it by deteriorating, some, molecule of freaking mercury, that should bother you as a holder of gold. You know what else should bother you? It should bother you that it's one of the most prevalent metals floating through space. So if anybody gets to space and starts lassoing these big ass rocks, the gold market is fucking dead. Dead. You don't think, look, dude, Elon Musk is partying in space every day now. You think it's outrageous to assume that at some point Elon and his guys are going to be on the moon? You know what's on the moon? A lot of it, apparently gold. Why? Because of all the little meteor strikes and hits and stuff. And what's gold? Ain't nothing so cool. So cool, but not there. You have been into space. No, I haven't been into space. You know we have science, right, Barry? You're not one of those anti-science guys, are you? You're not one of these flat earthers, are you? Science fiction. What do you mean science fiction? We've had a rover on Mars for 14 years. All right, Barry. Yeah. Anyway, cool. If I have some money, yeah. Well, yeah. That's an interesting argument. That everything reduces to the price of water, salt, sugar. Like the basics of like food. Like everything at a point reduces down to that. Resolves down to the price of salt, right? Like there's a whole interesting, like historically throughout time. Yeah. Well, I guess the new salt is computronium, right? Compute goo. Anyway, that's funny. People that are led to believe in the quantum financial system reset. I know. I do think that there's some kind of a reset, economically retrieving gold from space. Well, yeah, but years could be 2 years, Barry. In global chaos. I don't know that we have. Well, I guess you could argue chaos. I'm going to give you that one. Barry. I'm going to give you the global chaos thing. I think things are chaotic, but I think things are mostly always chaotic. I don't think they're dystopian. And I think that the AI machines and the AGI machines and the digital superintelligence systems are going to solve a lot of this. And not everybody will be happy, but I think the majority of people will be happy. And I think as things become more calm because of AGI and, beneficial, benevolent, benign, helpful, hopeful, harmless, we endeavor to create digital superintelligence or AGI systems. I hope as we approach that, our concepts of money and value will change a little bit. But until then, you got to make as much as you can because Because if there's if the helpful, hopeful, harmless, beneficial, benevolent, benign AGI systems come after Skynet, could be messy. We just got to make sure Skynet is second, not first. If Skynet comes first, it's gonna be bumpy, and you're gonna need some cash. You're gonna need some money. Yes, gold does have yes, gold has industrial value. It conducts electricity exceptionally well. Yes, not as good as platinum or the palladium group metals, which are now less costly as of late. Meaning, and also gold's not great with heat. Platinum, palladium, rhodium, ruthenium, iridium are good with heat. They're with a much higher melting point. So, as far as like space travel and stuff like that, and like really high temperature systems, gold does not suffice. Gold is cool. Gold looks cool. Like I wanted to have enough money where I could buy a treasure chest of gold coins. I still want to do it. I want to have a treasure chest of gold coins. I'm going to do it. It's going to cost a fortune. How many gold coins do you think you need in a small treasure chest to be able to like mash them around with your fingers and feel like you're a pirate? What is the correct pirate amount of gold coins? I think a box like this big, where you can run your fingers through it, like, and it goes clink, 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 clink. 1,000? You think it takes 1,000? Shit, man, that's a lot of coins. 1,000? No, let me see. This is like 10 1-ounce rounds. So in a box like this, I say three to 400. 3 to 400. So that's $1 million. So you need $1 million. Yeah, you need $1 million worth of 1-ounce rounds. But if you had that in a treasure chest, you just run your fingers. 1,000 pounds. You guys know how. Come on, man. It doesn't have to be a full-size treasure chest. This is just something I can keep on my nightstand. And when I want to feel rich, I can just run my fingers through it. That's all. Gosh. You guys in your big vaults. Okay. Now let's switch gears. Anyway, I agree, Barry. Gold is cool. Gold is cool as hell. And I was in the gold business for a while, and I liked it. And it was fun playing with gold. It was fun melting gold. It was fun doing all that stuff. It was a lot of fun. It was mostly useless because gold did not perform. And if you sat in gold, you got destroyed over the last 15 years. You got epically flipping destroyed. And so, yes, there's near-term moments where those assets perform, but you do need something that I think has a little bit more a longer range upward trajectory. And the problem is that gold is not a good substitute for cash creation, for currency creation. And that's the problem. You need something that beats debasement. You need something that beats. It can't just pace it. It needs to beat. Because real estate over time, real estate paces or tracks currency creation. That's why houses double every 10 years. You're like, wow, this house is twice as valuable. No, it's not. There's twice as much money out there. Your house hasn't gone up in value at all. Matter of fact, it's less valuable because it's old and fucking decrepit. But it's gone up in dollar terms because there's twice as many dollars. So, you need some assets or some basket of assets, or you need to take a pile of assets that you can do your little magic on, perform your trades or express whatever, your financial engineering on, that can outpace currency creation. And that's the tricky part. Gold did not check that box. Silver did not check that box. Nothing checked the box, except in the near term, these crypto assets. But again, there's only been, 15 or so, 16 years of data, which is not enough data. We probably need to go out another 10 years before we have some real data on this kind of idea that crypto assets like Bitcoin and things like that will survive the debasement test of time. So there we go. Okay, now let's switch gears and go back to what Green was talking about earlier, which is tokenization. Let's go. Let's talk turkey. Oh, wait. Do we have a good image? That's not the good image. We don't have an image. We need an image. I need a tokenization image. Let's see. I need a landscape-oriented image that represents the idea of tokenization of real-world assets. Let's see what the robot comes up with. Okay, but until then, let's do our little interlude. Go here, take this guy off. Go here. Go like this. We'll go like this. Do we need that cash in the background? We don't need cash in the background. I don't know. We'll see. We'll see. We'll just have to see what it serves us up. I don't know. Could be anything.
Hello. You're late.
I like the little robot guy. He's my favorite.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay. Let's get this down here. Okay. I don't know if we want to be looking at prices while we do this. I feel like that's the wrong backdrop. Oh, I'm getting some dots. Look, some dots are coming. We're getting some tokenization dots. This is very exciting. What? Why did stop creating image? Don't stop. No. Well, you know what? Guess what? Until it creates a better image, this is going to be our image. And then the cloudy part of it is just part of it. Oh man, did some little weird shit. Where'd you go? Hold on, give me a second. What the hell? Oh, that's weird. On the computer. So we got the whole image, but let's go here. Click. Oh yeah. Okay, hold on. We got it, you guys. We got it. It finished it on my phone, and then it pushed it to the computer. Oh yeah. It even spelled the words right. Are you kidding? That's good. Okay, let me make sure it's not too loud. Okay. All right. Where are you? Okay, let's talk about... I'm so happy that it spelled the words right. You know, sometimes it's the little things, right? Okay. The basic discussion today is going to be... I was reading this article. It's a pretty good article. It was a little bit... I think it was a little bit clunky. So I did some business with it, and I tried to clean it up a little bit. But I like the general message. And the idea is that when ETFs were introduced into U.S. markets, and then global markets, it was a big freaking deal. Brian, I'm still using GPT-5 for that kind of stuff. It's just because it's easy. It's easy peasy. Anyway, the ETF moment in finance was a big one. So think back. We're 1990s. Many of us very young, some of us kind of young. You know what? We're all younger. Am I right? Anyway, stock market was mostly stocks and mutual funds. Okay, that's pretty much it. People invested in bonds, and in the stock market, it was stocks or mutual funds. There was some other weird little funds, but mostly stocks and mutual funds. Exchange traded funds, ETFs, they barely existed. The very first ETF launched in 1993, and almost nobody thought it was a big deal. They were like, "This is pretty stupid." People, there were naysayers. They naysayed, and then you fast forward to today. ETFs hold trillions of dollars worldwide. Trillions, I say. And they became the default way that investors kind of access markets, especially markets where they don't exactly know specifically what to get, but they know that they want exposure to an area. They say, I want to be in there somewhere. How do I do it? ETFs. So here's the question. If you were alive at the very beginning of that shift, what if you had the chance to understand it before Wall Street understood it, right? If you understood ETFs in 1993 and you weren't so rich now that you died of like died in space on your, solid gold diamond encrusted spaceship or whatever, like if you knew now, if you knew in 1993 what you do know now about how ETFs blew up, how rich would you be? Very. Rhetorical question. You don't have to answer it. Very is the answer. Very. And that same opportunity, that disparity in understanding, I think it exists today. And that is with this concept of tokenization, like we're flirting with. So when you hear tokenization, it's exactly what it sounds like. Tokenization means taking real things, both that you can put your hands on and that you can't. So instead, this whole idea of real world assets, everything is a real world asset. So tokenization means taking assets, specifically in this case, financial assets, bonds, stocks, piece of real estate, potentially automobiles, boats, yachts, stuff. So it doesn't just have to be a bond or a stock or a piece of an ETF. It can be hard stuff that you can put your hands on, that you can headbutt, that you can lick, that you can throw at people. So bonds, stocks, real estates, assets that you can both touch and not. All of it, right? Creating a digital version of it on a blockchain and ascribing value to it. Well, the world will ascribe value to it, right? So right now, when you own a stock, you don't really hold the certificate yourself. It's recorded in a big giant database at a custodian bank. And that's why trades take days to settle, T+1, T+2, because they got to go talk to the bank and all this kind of crap, which is very slow. With tokenization, ownership lives on a blockchain. So what does that mean? Well, things on a blockchain are instantly verifiable, instantly transferable, and programmable. So that you remember this, I want everybody in the chat, all of you. How many are there? How many people are here in this chat? 99 of you. All right. I want 99 people to write verifiable, transferable, programmable. Verifiable, transferable. Even if you're on your phone, do it. Type it. Get your fat thumbs moving. Verifiable, transferable, programmable. I'm not moving until I see a few. Let's see it. I'll wait. I got nowhere to be. Nowhere to go. No one to call. No one to talk to. There we go. Bam. Verifiable, transferable, programmable. I like because those words have, well, you can pronounce them really cool. Verifiable, transferable, programmable. It's fun, isn't it? Big words can't spell. Write it, Barry. Spell it. You can't just put an R. What is that? Verifiable, transferable, R. What is R? Repeat, reuse, in relation to. See, I'm gonna make you guys done learn this stuff. Anyway, so instead of waiting 2 days for a bond to clear, T+2, this should happen in seconds. Why? Because verifiable, instant verification, transferability, programmability, verifiable, transferable, programmable, instantly. Guess what else you get rid of? A bunch of middlemen, a bunch of scummy middlemen. That feels good. It feels good to get rid of scummy middlemen, rent seekers. So 2 days for a bond to clear? No, seconds. Instead of 1,000 middlemen skimming fees, putting their hand in your pocket as the transaction moves around, you can trade directly peer-to-peer, built-in trust. Peer-to-peer could also mean you go to Starbucks and you can actually spend from all of these other assets you have. And my idea is to have this AI, this AGI brain that's looking at what are the assets that are not moving the most, what are the assets that have the most potential and the least potential, and then I should be selling off whenever I want to make a trade. If I want to buy coffee, dinner, buy a new car, whatever, I should be trading off assets that are the least likely to perform. And when it doesn't know, then it will take a little bit of a bunch of assets. So I have an amortized spending, maybe a little bit of 1,000 assets. So I don't even notice it. I just get my $5.85 because that's what it costs now for a chocolate foam cold brew. I get my $5.85 just out of the goo. My AGI takes it out of the goo. I don't even notice it. Just take it out of the goo. You kidding me? This is what's coming. I hope this is what's coming. Anyway, so why am I specifically, or why are we comparing this to ETFs? Well, ETFs were revolutionary because they made investing cheaper, faster, and more flexible, right? But now that we've added instant verification, transferability, and programmability, we are making the world cheaper, faster, and more flexible with less middlemen. Tokenization basically promises the same thing, only with a much greater reach. Think of the analogy of like mutual funds were to ETFs what today's bank-led financial system is to tokenization. Okay, so think you had mutual funds and then ETFs. Holy smokes. Then you go, okay, today we have this bank-run, bank-centered financial system versus tokenization where we each possess total control of all of our value. Turns out you may not need a bunch of other people to tell you what you can to let you buy fucking coffee when you want to. You might not need permission. You might not need permission to spend your own money from a bank. Like, what do you use it? What's the purpose of the funds? None of your fucking business, banker. None of your business. If I want to light this shit on fire, that's my right. I made it. They taxed it. Stick it. Anyway, ETFs cut out friction, and they changed how everyday investors were able to access the market and also specific areas of specific markets, right? So tokenization could cut even more friction. So this time it's not just stocks, it's everything. Everything. Government bonds, corporate debt, right? Bonds. Real estate, art, music royalties, jewelry. All things in the future. Progress in your own career. You could have an actor forward sell success in his future career. He, she, or they. Like, there's all sorts of crazy stuff you could do. And if someone else ascribes a value to it and wants to give you money for it, cool. So who are the people involved? Let's game theory it out. We got to figure out who the players are, right? We're looking for the rational players. In every market transition, you have players, you have strategies, you have payoffs, right? Show me the incentives, I'll show you the outcomes. So, Wall Street incumbents, regulators, startup and crypto natives, and then investors like us, okay? So the Wall Street incumbents. Strategy A, they embrace tokenization early, they invest in the tech. Strategy B, they delay. They try to protect old systems. And what is the payoff structure for these Wall Street incumbents? Early adopters will capture most of the new revenue. The laggards will lose relevance, and they may get so far left behind that they have to close up shop. It could be it's not a winner takes all, but it could be a winner takes most everything situation. This is a big one, just like the ETFs displaced most mutual funds. On the regulator side, strategy A, they build clear rules that allow tokenization to grow safely. Strategy B, they can stall, they can block, they can overregulate. Luckily, at least for the next few years, 3.5 years, we have a regulatory climate that's more like strategy A, which is likely to enable. So that's where the payoff is. If they enable, they get better, we create safer markets. If they stall, innovation happens offshore, outside of their control. They saw that with crypto before. I don't think they're going to let that happen again, at least not this administration. And again, I'm not saying that they're perfect, but at least in this aspect, in tech and in kind of forward progress with crypto and things like this, they are as good as we're going to get. This would not have been the same if the other administration, if she was running things now. This would not look like this. Okay, another set of players is the startups and the crypto natives. So they have a strategy. They can build tokenization infrastructure right now and start rolling out products and testing, or they can wait for Wall Street to define the specific standards. So what is the payout structure? Well, the ones that move first may capture enough outsized returns that the cautious ones just get destroyed, left behind, just do not exist. This is where you may see some of the layer ones that are not really performing well competitively. They could focus in just on this and say, we're just going to do this really good. And they may have a chance. I think that'll be a new thing that these companies start pitching. The copy and paste layer ones, the Trons, those kinds of things that aren't really doing anything very good right now. But that copycat everything, the copycats, this will be the new thing. It was the NFTs. Okay. Then it was the meme coins. Okay. Then it was ridiculous gambling, which that's here to stay. And I think tokenization is going to be a big one. On the other side of it, where's most tokenization occur right now? Ethereum or layer twos. So Ethereum. All right. And then the last group is the investors, which is us, right? All of us hedge fund managers, which we all are. And so we have a couple strategies. We can learn, we can adopt, we can use tokenized assets every chance we get, or we can stick to the old system and say, I don't want to learn new stuff. Early investors are going to get lower fees. They're going to get faster access to their value. They're going to be able to move quicker on new opportunities, new investments. Later investors will probably just miss this one outright. But they'll be able to benefit from it, right? So it's not a zero-sum game. They'll still benefit from it, but they're not going to benefit from the early boom. So it's a coordination game, right? Everybody benefits if tokenization works. Early people benefit way more. But if no one wants to move too soon and take the risk, then it's going to be a very small group. It's going to be a very small group of beneficiaries. And there are some real world examples of this already happening. There's an asset manager called Janus Henderson. They launched a U.S. Treasury fund on a blockchain with Centrifuge. And within a few months, it had gone. By the way, Janus manages $300 billion in assets. So they have over $400 million in assets on this tokenized treasury fund platform. They scaled another on-chain treasury strategy called AAA, which I'm guessing has to do with some kind of pristine corporate credit. And that thing's at over 750 million right now. So even conservative firms are starting to kind of dip their toe in this space. So your basic benefits of tokenization, there's four easy basic things: speed, transparency, access, and cost. Speed, settle in seconds instead of days, instead of T plus. And when it says T plus one, it'll mean T plus 1 second. It doesn't mean T. It just mean settlement. What is the settlement? T. Okay. Transparency. Transactions are live on public ledgers, which means they are visual. They are visible in real time and auditable. You can see it. You can measure it. You can math it. Access. Fractionalization is what we were talking about earlier, where you can own $50 worth of a skyscraper, $10 worth of a airliner. I mean, $64 of a treasury bond. You can own part of my gold treasure box, my gold treasure box with my 300 to 400 coins in it. You too can own part of that. We tokenized a Rolls Royce, for those of you that don't know. Although I'm going to end up having to pay the remainder of it, but we tokenized part of a Rolls Royce, the part that Nick won't pay. Nick will pay the other 3.2 million, but the first 500,000 we tokenized. And so we have a 1 of 100 Rolls Royce coming, hopefully in 2027, maybe 2026, because they're supposed to have the mock-up of it now. Well, in the next 2 months. I can say it's the Rolls Royce Nightingale. You probably won't find much about it. They're making 100 of them, and they are expensive. And we tokenized one, and then we will get it, and we will flip it. And I'm guessing that by the time it comes out, that thing is somewhere between, I don't know, 5, 6, 10 million bucks. And then we'll have a nice little payday. It'll be kind of fun. Or we'll send it around the country earning money, and we'll earn money from the money it earns, and we'll never sell it. Who knows? Who knows what we might do? It's tokenized. We did this. We did this like a year and a half ago. Anyway, so fractionalization means you can own you can own fractions of stuff, or at least you can control fractions of stuff. Again, since we don't really own anything. And then cost reductions, right? Fewer intermediaries means fewer mouths to feed, which means lower fees. Lower fees. Cost go down. Down. So the market of the next 5 years probably going to look a lot different than the market you see right now this second. There's some challenges, obviously. Tokenization is not guaranteed to win. So again, regulation issues, trust issues, coordination issues. Governments still worry about fraud, money laundering, systemic risk. That's never going to change. Investors may hesitate to buy digital versions of bonds that they don't fully understand. I don't think that's much of a risk. I think people do everything digitally already. I don't think it makes a difference, a digital bond versus a non-digital bond. You buy it the same way on your computer. Same shit. They don't send you the certificates to your house. You're not pulling the coupons off and trading them in. And then coordination, right? If every bank builds its own closed tokenization system, you don't get the benefits of a more of open liquid markets. Then you got to have intermediary markets and all this kind of stuff. So ideally, there would be some coordination where there's a more open, mostly regulated, somewhat regulated system. And I mean regulated from the specs of the building of the system, right? So there are barriers. Sometimes the dominant strategy is to wait until others move first, which is why adoption can feel kind of slow. But I think others are moving into this now. I think we're past that. And there would likely be a tipping point, right? Where tokenization would have this moment where there's enough assets, there's enough investors, there's enough regulators all aligned that adoption becomes pretty much unstoppable. And then game theory would tell us that, okay, here come the network effects, right? The more assets that are tokenized, the more valuable tokenization becomes. Once enough players jump in, this equilibrium shifts and everyone else has to move or they risk being irrelevant. So we have to get to the heel of the boot where it jumps up, that tipping point. And so why does this matter? Because we're looking at the world over the next 5 years trying to beat the robots. We got to do everything we can before the robots control everything. And so new asset managers will start building tokenized funds. We are asset managers, so we will be building our own little tokenized funds. Startups will be creating platforms for tokenized real estate, credit, all sorts of different, cash, CCQE, right? Cash, credit, and quality collateral. This is quality equity too, I guess, right? Cash, credit, quality equity, quality collateral. But the knowledge gap is pretty big, right? So you have regulatory agencies that are looking for younger individuals that might want to understand this tech. Of course, again, the robots are coming, so a lot of this will be kind of automated regulation. We'll see. But the knowledge gap is pretty big. And the understanding gap is pretty big. So most people on Wall Street, they don't understand crypto yet, but much less tokenization. So if you do, you're going to have an edge, especially as a consultant. Many of you might be getting to the point where you can start doing some consulting, because you might feel like, well, I don't know everything, but guess what? You know a lot more than most people. There's a lot of money in their heels, right? So tokenization could be over, the next several years what ETFs were for our grandparents, right? A structural shift in how finance works. And the players are already kind of moving around, but the game is still very much wide open and mostly uninvested. So if you can learn and you can adapt and you can engage with tokenization early and just kind of start wrapping your mind around this concept, then you can position yourself at least as a competent fiduciary for your own money, but potentially as a consultant or a leader in this next wave of finance over the next 3 to 5 years. So if people are asking, what should I study to do better in investing, or what should I study in finance? You would tell people, understand crypto, understand tokenization. This could be the next ETF moment. And if they don't understand what ETFs are, then they got to go do some homework, don't they? So that's kind of where we're at. I think that's important. So grapple with this. Yes, verifiable, transferable, programmable. Get rid of the middlemen. There we go. Do I think Ondo? I don't know. I mean, probably. I think a lot of people don't probably understand Ondo, and it's not super sexy. I think Ondo will do just fine. It's just not sexy. It's just not sexy, man. It's not sexy. Yeah. But yes, the robots are coming. All right. Let's see. Could Tether, one of the largest treasury buyers, using ETH as a banking rails, be the future of stablecoin? It's unlikely. It's unlikely because Tether has. Well, look, it's gonna be private companies. I mean, you're liable to see. It's hard to guess, but it's going to be banking institutions. It's going to be real estate trusts, firms, wealth managers. You could see Amazon. You could see a lot of these companies come in. So I don't know. I just don't think Tether. I don't think Tether is a big deal. They have a bunch of counterfeit money, and everybody kind of knows that. And so I just don't think Tether's that interesting to people. Anyway, yeah. So let's call it a day. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk, strung out on meth grandmother or Brandon wouldn't do. Got no idea what the weather is down there where he's at. Yeah, and don't stress about prices. Don't stress in your options account. Don't stress about money. Make a little bit better decision than your peers, a little bit more than half the time, and you will just disappear from the people around you with success. Success in our business looks a lot like currency units, which looks a lot like Ferraris. It looks like Ferraris. I don't know what to tell you. It looks like Ferraris. And on that note, I bid you a fond adieu.